Hi, Dale. Can you hear me?
Hi, David. Great to meet you.
Great to meet you as well. Good morning.
Thank you so much for being with us, David. I'm so glad I reached out to you on Twitter. I've been to your landing page on Twitter. You have a pretty good reputation, actually. You know, a lot of people follow you, respect you. Kind of like an innovator in trading, and your Twitter handle is @TradeIdeas. There's a hyphen or something for your website. But, you know, David, I like to start with how you got here. And, you know, everyone has a beginning. Everyone starts off somewhere. And I'm always interested in how guys like you who have become successful traders, what it was like for you in the beginning. Did you have a mentor? Was there a book? Who do you blame for having gotten you involved in the industry, buddy?
Okay, I'm lying down on the couch. I've got a morning Bloody Mary, and
I've been called a commodity shrink, so feel free to be an open book. So go ahead. Go ahead, man.
I'm gonna cry, Dale. Yeah, founders stories are pretty are pretty rich and amazing, and there's a lot to mine from them, and mine is no different. But it starts with the University of Texas, really, where I met my two other partners.
Wow.
First of all, you can still hear me, right? Is everyone?
Yeah, I can hear you and see your screen.
Okay, great. What we're seeing right now is trade ideas, and we're looking at the pre-market as it kind of develops, and we're looking at a surfing mode where it's going through and finding interesting setups. So on that backdrop, I used to think that the definition of going to university was in order to get an education, learn some things, and then apply it out in the world. But my partner, you know, and as I said, I met both of my eventual partners of trade ideas at the University of Texas, and one of them was my fraternity brother, and he was like, you know, I didn't go to college to to learn stuff from books. I came to college to start a network and to find you. And I was like, oh, that stuck with me for sure. And you know, we had a great college experience, and then we kind of went about our own paths. And mine was to, you know, I worked in brand and marketing for General Foods before it was acquired by Kraft, and then Philip Morris, and now what it is today, owned by Heinz and so forth. But that's where I got my initial chops on marketing and strategy and branding. And my other partner, Dan Merkin, went on to, right after college, you know, get involved in the market sooner than I did. And so he brings about 8 years of market experience to trade ideas before we started. And so he started off as kind of a consultant for all prop trading firms like Block Trade back in the 90s that were doing basic access, SOES bandits, basic access to the
SOES, I remember. Yeah.
Okay. So that's where he kind of cut his teeth, and you know, we always talked and we always kept in touch with each other. And he eventually started a company that was a forerunner to trade ideas that was called Future Trade, and it was a direct market access platform that competed with the likes of Ready Plus and a couple of others. And on several occasions, he kind of, we talked and said, you need to join the company. This would be a great opportunity. But and he raised a mezzanine round of funds from Menlo Ventures, a VC firm out in California, where he had moved from Texas. And for me, it just wasn't the right timing. They never really got out of a vaporware state and into something that was in full production. So I was at the time as a consultant, and and eventually, I got an MBA that was paid for by Kraft Foods, and I thought, okay, I've gone back to university to learn some things, and Dan's MBA equivalent was going through the process of raising that mezzanine round of funds for Future Trade, and then kind of losing control of the company when the board decided that they needed a more seasoned executive to kind of come and take over. So he eventually got pushed out.
Yeah. Huh.
So that was kind of a traumatic experience, but it shaped what was to come. And so what was to come was working with my other partner, Philip Smolin, who's our Chief Technology Officer. We created Trade Ideas, which was a smaller ambition of just creating a scanning tool of the market to help traders. And it was not regulated. It didn't work. We didn't need to do the regulation of back office and
right.
Processing and clearing and the like. So it was a trader's tool that was built from scratch, and it was a scanning tool in the beginning. And on that basis, it met my criteria that this is an actual product. We could start selling subscriptions to it tomorrow. And so I left the consulting firm and joined and started to grow the company. That was in 2003. And so, for the entrepreneurs out there, we had the product kind of modeled or beta in 2002. We started collecting revenues in January of 2003. And
that's great staying power too.
Well, it says a lot to the technology and to a lot of the decisions that we made early on. One of them, the key one, was our cap table is pretty basic. There's only three equity partners in the firm, and then our employees and the rest. We decided early on that we were not going to take outside capital and suddenly turn what was a kind of passion project into work driven by responsibilities and reporting and using other people's money to grow the company. We decided that we were going to this was either going to succeed or fail on its own.
An observation I have, it's also a statement about your relationship with your partners. Yeah, because partnerships like options, a lot of them come and go. And you're talking about 14 years of you guys riding the roller coaster together. That's a big advantage when you have a team. I'm a big believer in a team because 1 + 1 + 1 could equal, 111 instead of 3. So, so you're blessed to have found guys that you enjoy, your friends and business, to not pollute the relationship, and you guys are all still together. Congratulations.
Thank you. It's definitely a blessing, and I think you're right to kind of point that out. I mean, it's definitely seeped into the culture of the company, and that's we do business only with the people that that we have relationships with and that we've established trust and that we like. That's permeated all the way down to the employees and the team that we've built. The last 3, 4, 5 hires I can think of have all come from previous relationships that we've established, and thankfully that's getting easier the more time you've spent in this space and building the company. But we've had one perfect example is early on, maybe about four years ago now, we have a support forum as part of our support that's available 24/7. People put in a question on a board and we go answer it. And about 4 or 5 years ago, we had a person on the support forum that loved the tool, subscribed, and was answering questions better than we could and faster than we could on our own support forums. And this gentleman's name is Barry Einerson, and he eventually kind of created his own position, saying, look, I love the tool so much, I love talking about it. We ought to have a trader's room, a kind of chat room where we can be there all day and kind of use the tool and look at the markets. And we thought, well, that's a genius idea, and you're hired with that position and mandate in mind. And so this was only after he had spent literally 2 or 3 years answering questions and becoming a resource that he eventually became the moderator for this room. And he suffers no fools, and the room is meant to be focused on the markets. And it's now like over 600 people that are in there daily. To just talk about the markets, and that's part again of the culture of how you bring on people that have we have not had a hire where we've had to like interview per se. We've known all the people who have joined the team well before they've joined the team, and that's not a bad way to kind of grow. I don't know how the day that we start to really scale and need to massively build out, that may change, but it's certainly what's helped in getting us here.
Okay. So, it's amazing that you didn't think of the trading room before he brought it to you, but, it's I really believe in them because that supports the people that subscribe to your product. And I'm a big believer in social trading because we only have two eyes, even with the tool. Your tools, I bet there's times that you'll miss something on a scan that someone else may see and bring it to your attention, right?
Oh yeah, I mean, I would, and the nice thing about it is that the company's grown, and we're able to kind of. I took a vacation in June, and I was gone practically the whole month, and so the first thing I did when I came back was to immediately plug back in, was to sit in the traders room and listen to everyone starting to use using the tool, and getting into the conversation again, and it's a great feeling.
So I'm assuming it's that you guys coded this and it's proprietary, but what can you tell us about your model and what you teach and what people learn, and perhaps what performance has been? I don't know if you guys track your performance, even if it's hypothetical or it's real time. Tell us about the product now, David, okay?
You bet. So the arc of the way the product evolved, as I said, from a simple scanning tool, it's important to kind of quickly go through the history of how we built and innovated on top of all this. So we started with a scanning tool, and we were able to quickly build the company and start getting revenues on thanks to key partnerships we had early on with Scottrade, and then followed about a year later by E-Trade, who took components of our technology and put it into their platform and gave it to their customers, as part of their service for free. And we worked out enterprise licenses to do that. And that sustained us until, those are ongoing relationships.
Great accounts to get right off the bat.
Exactly.
Really, very fortunate, instead of, having to get, 100 retail subscriptions, you guys found gatekeepers.
That's right. And that's it. You've nailed it on the head. I mean, and early on, I made a decision that even to go and open up the yellow pages at that time, or even the phone book on the internet, and to look up everyone who had the word capital fund in their names in New York and go calling on them, and if you gave the pitch and you went through the pilot, and all you could get was maybe 3 or 4 licenses, at a time in these rather kind of small offices. And even the large ones like Merrill Lynch and so forth, their trading operations weren't as large as the name might suggest, but everybody wants that name on their website to call a partner. And I saw too many firms who were burned out and carcasses on the highway, in the market from making these kinds of decisions. And I decided that although it was exposure more to a retail group of self-directed investors and traders, it was a way to reach one decision maker who could affect the technology decisions for tens of thousands of people. And so I kind of just stepped up to the plate, and we were able to show Scottrade the value of seeing curated trade ideas, what that did on people's decisions, and how that affected their trading behavior.
Would you characterize most of your stuff as being swing, intermediate term trading, or 2 to 3 day guerrilla warfare type trades, position trades, or do you offer all different TFs, time frames?
I'd say it's everything from below that, everything from 2 to 3 days down to intraday.
Okay.
If you come to trade-ideas.com and you give us your email, we give you a trade of the week, and it comes out and it's published every Monday. And those trades of the week are actually our first foray into much longer term positions. The trade of the week is specifically designed, it's sourced from our artificial intelligence, and it will provide an opportunity with a game plan that can last weeks or months, depending on the position management you apply. I mean, we tell you, this is when the trade is live, this is the stop loss if the trade fails, and at this profit target, start to make decisions about either adding or harvesting. But we've picked some amazing, stocks, and I'll show you your question was about performance, and so I just got to finish the evolution of the product. We started as a scanning tool. We added a back testing component, and then in the last 4 years, we realized that we needed to do a better job of showing people how to use the tool rather than just providing a scanning and a back testing capability. We needed to do the job of actually showing examples, back tested examples of things that were working in the market. simply because our own customers using the technology weren't able to, except for a small few who could configure the scanning technology themselves and then run the back testing themselves, they weren't finding great results. And that's a lot of stick to put in front of someone before you give them a carrot. So we followed a strategy that said, we've got to show the maximum value of this technology on the first impression. On the first impression, you've got to understand how this tool can make you money. And to do that, we decided to create the algorithms and strategies that were working. But to scale that, we needed the artificial intelligence to crunch all this data on its own. And now that's exactly what it does. And I'll step into this in a moment and show you what the AI looks like as we move away from the pre-market as soon as the market opens. But all that to say is that this evolution has taken us from scanning to this now kind of machine learning artificial intelligence that's able to create the actual what's working in the market. What is this tool and what does Trade Ideas predominantly look at? It looks at US equities and equity derivatives, so ETFs, indices. We do look at options data, but we look at options volume data more than specific contracts and price.
Okay, so volume, I know, the Nigerians always talk about volume in options trading. Do you believe that volume in options trading gives you a heads up as to directional trades in the market?
Absolutely. I think these guys are great, and that's like it's just like tracking a deer in the snow.
Right.
I mean, it's the footprints that point that at least give you the.
You guys don't have ponytails and goatees, though, do you?
No. I would say our culture is.
David, just checking.
We're a nice mix. Our culture is definitely SoCal, Southern California.
All right.
And
but you're in Atlanta, aren't you?
I'm in Atlanta, and I'm the one who wears the suits, and I will get to Chicago and New York as to wine and dine and enjoy a nice steak and a big fat red.
Boy, that sounds good. All right, so sorry I interrupted you with that, but okay, so you follow the option volume, and
right.
And for your algo, did you have to go to outside people to plug in all your stuff and develop the algo, or did you do it in-house?
Yeah. So that's a great segue, Dale. And so this chart that I'm showing right here is kind of like the bird's eye view of how we develop the algorithms and what's happening with the data you're about to see. Starting from the left-hand side, we take a variety of data feeds, and the more diversity in the feeds, the better our algorithms and our results are. By that I mean we're taking the time and sales from the actual exchanges. That's the basis of our technical analysis that we develop.
Okay.
And then we take data from other sources and vendors that provide us with fundamental data like earnings and
PEs.
Exactly, EPS and so forth.
Okay. All right.
And then we're also adding, that's kind of typically structured data. And then we add non-structured data, which is like the news and social media. And that we feed into our back office. So we look at, as I said, we look at social media, we look at news, we look at fundamentals, and we look at technicals. And then we derive new data points from all of that. So we take interesting looks at some of the technical analysis, for instance, and we'll say, well, what's the performance since January 1? We take derived data points from social media, and we'll say, well, Apple's mentioned so many times on average a day, but is today's performance being mentioned, is today's Apple social media activity more than usual or less than usual? And that's extra data that we're deriving from what we get.
All that. What do you glean from that? Because if you were monitoring Bitcoin, you would have had a mushroom cloud of tweets in the last 60, 90 days. So when it's becoming more prolific on Twitter, is it a bit of a contrarian signal or a confirmation signal for your work?
Those are the kind of questions that the algorithm actually, builds
it answers
on.
It for you, huh?
And yeah. So, even my own answer right now is dated, and that it's,
Could I interview the algo next time?
There you go. Her name's Holly.
I'm just kidding you, buddy. So okay, so you're plugging this stuff in, And so you have, it looks like what, how many different sources before you get to a conclusion?
Right. So the system has about 60 strategies, and some of them are ones that we create. We call them base strategies. And a base strategy might be, how is a stock reaching a 52-week high, performing in this market with earnings reported 3 days ago. And so it'll take that base strategy and say, well, it looks like stocks with earnings 3 days ago that are at a 52-week high are actually perform even better or have a more profitable result if it has more than usual social media mention. Whatever it is, it'll add whatever indicator that we have in our inventory, and if it improves the result as it backtests it overnight, it will keep that indicator. If it's an indicator that degrades the performance, it gets rid of it and it goes on to the next. And it goes through about 120 indicators for each of these base strategies. And it eventually optimizes and changes whatever it needs to in order to say that over the last backtesting period and up to and including yesterday, this is the best way to trade this strategy. So it does all this scenario backtesting. We call it the quantitative combine. And it will take the trading plan, the best way to trade it. Perhaps it's to hold it for 3 days. Perhaps it's to hold it for 3 hours. And it will determine exactly the best way to trade this strategy that it's found. And it combines all those. And then it does a final criteria that windows, and the criteria is a 12-point criteria. It's got to do with trading activity. It has to do with lots of different variables. And it eventually will pick about 7 or 8, or sometimes 5. And it will say there can be long or short strategies, and they'll be the ones that the system will publish for the day. Right. And then we allow our customers to either add their own preferences on top of that. They can do a custom kind of portfolio, and they can actually even auto trade from the trades that Holly, our AI system, produces. And then that's how we capture alpha. Let me go back first. I'll show you the performance in a moment, but let me go back and show you. Here's the AI channel. I'm going to click on this. The screen's going to change, and I'm going to show you what the strategies are for today that Holly has prepared. And can you see?
Oh, it's a she, huh?
Yeah, we call her Holly because an early customer beta back in 2015 was evaluating the software, and I think he said something like, "Look, if this actually works, it's going to be a holy grail." And we thought, well,
I got it.
We're not going to call it.
Because the Old Testament gives wisdom a feminine attribute. She is wisdom. So anyway, start listening to your wife.
Exactly.
Besides Holly, who do you listen to more, Holly or your wife? I'm kidding, buddy.
I listen to women. I listen to women. I listen to my daughters.
Right. There you go. All right. So now we're looking at some things that Holly spit out today, and I see the spider up here.
That's right. And, so this is our AI channel, and today Holly's looking at let's see, what is this? Five long strategies and 2 shorts. So let me take a step back. Up at the top, we always show kind of 3 charts in this particular layout. We show a 5-minute chart, a daily, and then always on the right-hand side here, this last chart is always a 15-minute chart of the S&P or the SPY. Right? Okay. So, as I said, it's quiet. It's the pre-market, and usually even after the market opens, Holly sometimes waits as much as 15 to 20 minutes before making a trade. But this is the lens through which Holly looks at the market, the way our AI looks at the market. It's only going to look and consider the market if any particular stock meets the criteria of any of these strategies, either long or short. And then here are the time stops, short of, if it doesn't reach its profit target or stop loss, this is the time in trade it will be in. Some are 60 minutes, some are 30 minutes. Then it has a profit target for each idea, and it also tells you this is how it's going to calculate the stop loss. A smart stop is simply, it's more AI that looks at the specific volatility of each stock, and then it will add a risk amount to that. in order to determine what it is. And if it reaches that threshold, it tells you. It says, this is the reason why I'm exiting the trade from a smart stop that's been hit. And then this is the kind of like the performance board, or the P over here on the far left is the P&L that will show in real time. And on the bottom, it'll show on the bottom left here are the trades that are closed, and any trades that it opens will first appear on the bottom right.
Really nice technology. Very nice.
So yeah, so maybe we'll have a chance when the market opens, maybe something will fire across here. But the rest of these channels offer you a kind of Netflix view of the market. So here we have a channel that's called the Swing Trade, or Swing Ideas. But when you click on these different channels, you're presented with a theme, a motif, a view of the market based on that channel. So we have a volume channel, we've got an options channel, we have a social media channel. Right now we're looking at the Swing Ideas channel. And again, if it's grayed out, it just means it's still the morning in the market.
Yeah, nothing yet.
Nothing quite yet. So that's why we were looking at the pre-market before.
Okay.
Let's go back to that pre-market. Okay, and let me actually go back to show you a little bit of performance. So again, what we're doing at Trade Ideas is we have this triad where we look at, we talked about, you mentioned it before, the importance of a trading room and support. And everyone who signs up for Trade Ideas gets a one-on-one hour of power training scheduled. And sometimes it takes, with our backlog, about 2 or 3 weeks, but that provides enough time to make sure you're using the technology on your own, kind of exploring, and then your questions get a little bit sharper if you spend time. And by the time that you have our hour of power training, you're a little bit more well-versed on how to use the technology, thanks to the videos that we have, the webinars that we put on each week, and the trading room that you can always access to learn how other people are using the technology. So the support and service, the actual technology itself, and then the content that we're creating from it is how we deliver our value. This, I'll kind of briefly go over, who are our competitors, who are we competing against? There are people that are doing similar things, but in a different way. I think we're the only AI as a service provider where on a subscription basis, you can sign up and get access to these algorithms to use in your own trading environment. Whereas a lot of other firms that we compete against have the algorithms, have the teams developing them, and the AI, but you have to participate in their fund if you're going to use it. Find a fund wall. And one of our competitors that we look at, and that's making one of the larger ones, is Blackrock. This quote was pretty interesting from Larry Fink, who's the CEO there. Right. And these guys, by the way, they lost $500 million over the last 2 months and the first month of 2017, or the first, I think it was the last quarter of 2016.
Well, they did take the other side of Icon's trades.
They took the other side of your trade and Holly's trades.
Okay. Thought it might have been Carol Icahn,
Oh yeah.
Yeah. Okay. So all right. So there's an endorsement by Lawrence Fink. Why do you think it didn't work for them?
Well, I think a couple things. One, I don't purport, or I don't assume that we are moving the same amount of money as they are. So that's a whole different dimension of complexity. But this is hard work. The ability in order to have a functioning machine learning AI, you have to have, as a core competence, the ability to crunch a lot of data, big data. It's a big data exercise. And we do it well, and we've done it with our own data that we have, as I said, we derive our own data points from the data that everyone else gets, but how we're using that data, we have developed over 14 years. I have no doubt that these guys will get it right, and get it right a lot sooner than us, but so far they're not there yet from these reports, and they're not doing it the way that we do it, which is to make this available to anybody on a subscription basis. These guys you've got to invest in their fund.
Okay, so that's a good segue to, okay, there's your equity curve.
Well, this is just a quick performance of Trade Ideas. So for years, we started in 2003, as I mentioned. We had some nice revenues, but we kind of plateaued for several years as we kind of figured out what to do with our technology and how to make it more engaging. And we even started to kind of like drift down a bit until we followed the strategy I mentioned of making sure that we put the best impression the maximum impression, the maximum value on that first impression. And
Yeah.
that just got us into like, we need to do the job of creating the strategies ourselves. And then we added the AI and big data, and we have soared ever since.
Yeah, you're parabolic now. Does that make you nervous?
Not too much. We just keep adding.
Don't you need to consolidate these gains a little bit here?
You know, right now, when it's what do you say? You make hay while the sun shines, and you just you get out there every day, and it's a great environment because we were just awarded. We just made the Inc. 5000 list for the first time.
Nice. Congratulations.
Thanks. And we've been collecting a little bit of more awards and recognition. But let me talk a little bit more about performance, right? So let me stop here for a second. If you, as I mentioned before, if you come to Trade Ideas, you give us your email, we give you a trade of the week. And so this is a bit of an eye chart, but this is the performance year to date of these trades of the week that we put out since the beginning of January and ending June 30th, ending Q2. So you can see these performances, the losses are kept low because we have a stop loss in place, and you know, if it reaches it, we're out of the trade. And others like Weight Watchers is just that's obviously a killer, you know, call that we made, and that's still producing. But I play these as well. I mean, Chug was a good one. That's continued to do well since the end of June. CHGG. Here's Crocs, CROX. This week's trade of the week was QID, which is the S&P
ETF.
Exactly, the inverse.
Right.
Which I thought was a little telling.
Right. So you can use some of these things for broader market subjectively for yourself, broad market expectations. If you saw Trade Ideas spitting out some bearish ETFs, even if you didn't trade those, it would give you a bias for which way the market might go.
That's right, and I'll even give your listeners and you a even deeper dive, or just another indicator, if you will. So I thought it was interesting that we produced this, you know, QID as our trade of the week. And last week, I think it was Thursday or Friday, Thursday, I think it was, the AI system did not make a single trade the entire day. And the only other, actually, it's done that on a couple of occasions in the past. The last time that it made no trades on a trading day was the Friday after Brexit.
Okay.
And so, you know, it's not I don't think it's a forecasting indicator, but it is interesting that when it makes no trades, it is going in, it's in a mode that says whatever the market is doing today is not something I've prepared for. So rather than, you know, it's always under a mantra of do no harm as it looks to see opportunities. And if it doesn't see one, it does not trade. So it won't ever force anything. And then if there is something that happens and it stops trading in order to do no harm, the unique ability of the AI is that it will re-engage in the market often at times where people are either too anxious to go back in or worried about where does this end. It doesn't have those kinds of emotions, and it will go in and often do well. Brexit is a perfect example. When people were nervous and anxious the next Monday after the news broke, that's when Holly started trading again and really started to separate ourselves that year from the benchmark indices.
Okay, David, wow, what a tremendous tool. What's the best way besides your Twitter handle for people? Do you offer a trial or anything like that?
Yeah, you can use a demo version of our technology. It's 20 minutes delayed. It will give you the kind of menus, and it will show you how the tool can function. The best way to kind of start a relationship with us is come to the website of trade-ideas.com and sign up for the trade of the week, and just get a sense of the data that we're providing. Attend a webinar or come to the traders room, and that will certainly get you quickly into the community that of other people using the tool and what they're doing with it during the market. Moderated by Barry. That's just can't say that there's a better way to experience the technology than going into the traders room.
Okay. Well, David, I want to thank you so much for presenting your cutting edge product and You know, you're in the AI world now, and very nice results, and you represent your company quite well. You know, excellent spokesperson, and besides it being a great interview and an option for people to consider, I hope that we've made you a nice commercial.
Thank you, Dale. It's been a pleasure talking to you. It's been a pleasure, and I hope to meet you and to do this again in the future.
All right, my trading warrior brother. Thank you, David, very much, and good hunting. Sounds like you guys are definitely home free with what you have going now, and congratulations on your awards and breakthroughs, and most of all, David, your stick-to-itiveness is something that Jake Bernstein said. You guys have been at it for 14 years. Glad to see you reaping the harvest, buddy. Congratulations.
Thank you so much. Appreciate it, Dale. Have a great day and happy.
All right. Okay. Thank you so much. And that's my trading warrior brother, David. I probably butchered your last name. How do you pronounce it again?
Aferiat, like chariot. Aferiat.
Okay, David Aferiat. And before everyone does leave, we're going to wrap it up tomorrow. But I think that even David would agree, although in stocks, you know, if you're going to use leverage, you're not going to get the kind of leverage that you get in futures or FX. But it's my philosophy, the biggest mistake people make is using too much leverage. So I'm going to wrap it with use less leverage. Use less leverage when you trade the markets. Use wider stops so you don't get picked off. If you don't use less leverage, you might lose your head and your account will be dead. Use less leverage. And most of all, guys, don't just count your pips, count your blessings. Thank you for your attendance today. Thank you, investing.com, for hanging out with us in F.A.C.E. And we'll see everyone tomorrow to wrap up the week and see what Janet has to say. Maybe Janet says,
well, the Janet does not. It's not much here before we can do anything.
And maybe Mario will say, oh, well, the economy, I'm not sure it's really coming out of the hole yet. I might do a little more QE. So see everyone tomorrow. Adios. Enjoy your summer day. It's drawing to a close. And Steve, you got back from vacation already. Adios.